Imagine the year is 2024, and in the shadowed vaults of the world's most powerful financial institutions, behind biometric doors and encrypted ledgers, a silent revolution is unfolding. Trillions of dollars are flowing not into gold, not into bonds, not into the skyscrapers of Manhattan or the tech giants of Silicon Valley, but into a string of ones and zeros that most of the planet still dismisses as internet funny money. Bitcoin, the digital ghost that rose from the ashes of the 2008 financial crisis, is being hoarded by the same titans who once laughed at it. And tonight, in this cinematic journey through time, greed, and rebellion, we're pulling back the curtain on why big money, hedge funds, sovereign wealth funds, billionaires, even central banks, are secretly buying Bitcoin before 2025. Not in millions, not in billions, but in quantities that could redefine global power forever. Picture this. It's January 3, 2009, and in a quiet corner of Helsinki, a pseudonymous coder named Satoshi Nakamoto mines the Genesis block of Bitcoin, embedding a headline from the Times of London. Chancellor on brink of second bailout for banks. A digital middle finger to the fractional reserve system that had just detonated the world economy, leaving millions homeless, jobless, and furious. While Wall Street executives pocketed bonuses and governments printed trillions to save the unsavable, Satoshi's creation offered something radical. A currency no one could print, seize, or censor, capped at 21 million coins, secured by mathematics, and governed by code, not kings. Fast forward to 2011, and Bitcoin is a curiosity traded for pennies on obscure forums. But already the first whispers emerge. Libertarians in New Hampshire are using it to buy coffee. Cypherpunks in San Francisco are hoarding it like digital gold. And in the dark pools of early crypto exchanges, anonymous whales are accumulating thousands of coins that will one day be worth empires. By 2013, the price cracks $1,000, and the media calls it a bubble, a Ponzi scheme, Tulip Mania 2, but beneath the noise, a Harvard-educated hedge fund manager named Paul Tudor Jones is watching, studying the charts, reading the white paper, and realizing something the talking heads on CNBC cannot. Bitcoin is not a currency. It's a once-in-a-millennium monetary reset, a hedge against the very system that birthed it. Cut to 2017, and the world is drunk on crypto fever. Bitcoin surges past $20,000, Lambos are bought with meme coins, and teenagers become millionaires overnight. But the crash that follows in 2018 wipes out 80% of the market, leaving bodies in its wake, dreams shattered, and the mainstream crowing victory. Told you so. Yet in the wreckage, something shifts. MicroStrategy, a publicly traded software company led by a fiery prophet named Michael Saylor, begins converting its treasury from dollars to Bitcoin, not as a gamble, but as a survival strategy, announcing in August 2020 that it had purchased $250 million worth of BTC, declaring fiat currency a melting ice cube, and Bitcoin the only asset with a perfect scarcity profile. Wall Street laughs, until the stock triples, then quadruples, and suddenly, the smartest money on earth starts paying attention. By 2021, Tesla, led by the enigmatic Elon Musk, drops $1.5 billion into Bitcoin, sending the price to $69,000, and though Musk later wavers, the signal is sent. The world's most innovative company sees Bitcoin not as speculation, but as a balance sheet revolution. But this is only the opening act. Because while retail investors chase pumps and dumps, the real game is happening in the shadows, where family offices managing dynastic wealth, pension funds safeguarding retirements, and sovereign nations guarding their future are quietly, methodically, and relentlessly accumulating Bitcoin at a scale that dwarfs the public markets. Let's pull the camera back to 2020, when a little-known firm called Grayscale Investments launches the Bitcoin Trust, allowing accredited investors to buy BTC exposure without touching a wallet. Within months, billions pour in, and by 2024, Grayscale holds over 600,000 Bitcoin, more than any entity except Satoshi himself. But Grayscale is just the tip of the iceberg. Enter BlackRock, the $10 trillion asset manager that controls more wealth than most countries, who in 2024 files for a spot Bitcoin ETF. A financial instrument so vanilla, so regulator-approved, that grandmothers in Iowa can now own Bitcoin through their 401(k). The SEC resists, delays, denies, until January 10, 2024, when under relentless pressure and a court ruling that humiliates the agency, the first spot Bitcoin ETFs are approved. And within weeks, $50 billion floods in, with BlackRock's IBIT becoming the fastest-growing ETF in history. Larry Fink, once a Bitcoin skeptic who called it an index of money laundering, now stands on stage at Davos declaring Bitcoin a global monetary alternative and a flight to quality. The transformation is complete, not because Fink had a religious epiphany, but because his clients, the pension funds, the endowments, the insurance companies, demanded exposure to an asset that had outperformed every major asset class for a decade. But why now? Why before 2025? The answer lies in a perfect storm of macroeconomics, geopolitics, and mathematics that is converging like a supernova. First, the dollar, the world's reserve currency, is dying, not tomorrow, but in slow motion, bled by $35 trillion in U.S. national debt, $2 trillion annual deficits, and a Federal Reserve that has printed more money since 2020 than in its entire history prior. Inflation, once dismissed as transitory, has become a permanent tax on savers, eroding purchasing power at rates not seen since the 1970s. Gold, the traditional hedge, is bulky, slow, and controlled by central banks who suppress its price through paper derivatives. Bitcoin, by contrast, is weightless, borderless, and impossible to counterfeit, with a stock-to-flow ratio that will soon surpass gold's after the 2024 halving, which cut the daily issuance of new coins from 900 to 450, tightening supply like a noose. Second, nation-states are waking up. El Salvador, under the millennial president Nayib Bukele, makes Bitcoin legal tender in 2021, mining it with volcanic energy and stacking sats with surplus power, turning a bankrupt nation into a crypto pioneer. By 2024, Bukele is re-elected in a landslide, his Bitcoin bet validated as the country's holdings appreciate 200%. Meanwhile, in the East, China bans Bitcoin mining in 2021, only to watch its hash rate migrate to Texas, Kazakhstan, and Canada, proving the network's antifragile design. Attack it, and it grows stronger. Russia, sanctioned and cut off from SWIFT, begins accepting Bitcoin for oil in 2022, while Argentina, crushed by 200% inflation, sees its new libertarian president Javier Milei praise Bitcoin as the return of money to its original creator, the private sector. Third, the mathematics of scarcity is undeniable. 7 million of the 21 million Bitcoin have already been mined, and with each halving, 2008, 2012, 2016, 2020, 2024, the issuance rate halves, creating a supply shock that historically triggers parabolic price discovery. Analysts like Plan B, using the stock-to-flow model, predict Bitcoin reaching $1 million by 2025, not as hype, but as a function of shrinking supply meeting explosive institutional demand. And as 2025 approaches, the final piece clicks into place. The network itself is becoming unbreakable, hash rate at all-time highs, nodes in every country, miners powered by stranded energy in Africa and geothermal vents in Iceland. So when the clock strikes midnight on December 31, 2024, and the world celebrates a new year, the quiet truth is this. The greatest transfer of wealth in human history is already underway. Not through war, not through revolution, but through code, through conviction, and through the coldest calculus of self-preservation.